Okay, now we've talked a little bit about the difference between financial statements and managerial accounting. Let's dig deeper into managerial accounting and see what it is and apply it to different segments of our business. So, for example, the work of management is planning and controlling and decision making. If we break that down a little deeper, we find that planning is establishing goals, specifying how goals should be achieved, and of course, developing budgets so we can afford to pursue those goals. Controlling is after we've got our budget and we've got our plan in place, is we have to monitor it. So controlling is basically monitoring the plan as it goes forward. And so we establish feedback in the form of performance reports that compare the actual results to what was budgeted. And so we can see if our forecast is on track or if we need to make adjustments. And then beyond that, of course, there's decision making. And decision making is simply deciding between two competing alternatives. And so decision making in managerial accounting is very important. We decide whether product A should be cut or project B should be cut, or if they can all go forward. It's into make or buy decisions. Should we make this piece of equipment or should we buy it? All types of decisions in that realm fall under managerial accounting. So questions like what should we be selling? Who should we be serving? How should we execute? All of those fall under managerial accounting, and you would use managerial data, not necessarily financial data. And then your textbook breaks it into different activities. The first one being marketing. And it takes these three segments of planning, controlling, and decision making and turns them into managerial accounting statements so you can get a different perspective on what managerial accounting would be with regard to different departments. Let's start with marketing. Planning would be a question of how much should we budget for TV, print, and internet advertising, or how many salespeople should we hire in a new territory. So these would be planning managerial accounting decisions based on a forecast of sales, obviously. Controlling, we would ask questions such as, is the budgeted price cut increasing units as expected? You can see after the fact that we've budgeted something, and now controlling, we're checking to see if what we budgeted is actually what happened. The other question is, are we accumulating too much inventory during the holiday shopping season? So this is definitely a marketing question, and it's after the fact, so we're controlling for what we budgeted. And so you can see that managerial accounting, that wouldn't be reported in a financial statement, that's reported to the managers inside the company. In decision making, of course, should we sell our services as one bundle or sell them separately? This is a decision making between two different alternatives, which would also be managerial accounting. Or should we sell to customers directly or use a distributor? Again, a managerial accounting decision. The data would come internally and certainly not be external to the company. So you can see how marketing would take all three of those and use them in a managerial accounting context. But we can go beyond marketing. The next one is operations. Planning and operations was how many units do we produce? What should we budget for the period's utility expense? In other words, how much overhead would we use? In controlling, did we spend more or less for the units that we actually produced? So we would control if we have a price on how much a unit should cost, we would reduce that price or adjust that price as it goes forward because of how many costs we actually incurred. Are we achieving our goal of reducing the number of defective units? So that's quality control, would be through operations. But those numbers are not coming through financial statements. They're coming through managerial accounting statements. Beyond that, decision making from operations management perspective, should we buy a new piece of equipment or upgrade? Should we redesign our manufacturing process or lower inventory levels? These are decisions between two alternatives in the operations process. Again, not from financial statements, but from managerial accounting statements. They would also be internal. If we look at human resources, in planning, how much should we plan to spend for occupational safety training? How much should we plan on employee recruitment and advertising? Controlling is our employee retention goals. Are we meeting employee retention goals? Are we getting appraisals from are they completing their performance appraisals? Those kinds of things. Decision making, should we hire on-site medical staff to lower healthcare costs? Should we hire temporary workers or full-time workers? These all come from managerial accounting, not financial accounting. You can see that managerial accounting reaches into all different types or parts of the entity or the organization and has an impact on all of them. Beyond the numbers, we have to look beyond that for planning, controlling, and decision making, and to support the overall organization. The managerial accounting numbers do not get externally reported. They're internal numbers. You can see that they affect just about every aspect of the organization, and therefore managerial accounting is very important. It doesn't sound like it's very important, but as you get through the individual sections in this course, you will find that there are very applicable sections to almost every business out there. So when you start thinking of managerial accounting, separate it from finance versus inside the company. Finance is external, managerial accounting is internal, and then in each segment of the company, there's use for managerial accounting.